An inversion fair value gap is a failed fair value gap. I'm going to use this price setup to explain what an inversion fair value gap is. Here we see price has taken out an external range liquidity and we're expecting price to come into an internal range liquidity for bullish prices. Now we see price has failed to hold at the fair value gap. And when this happens, let's know that all hope is not lost. What we need to do is that we should wait for price to come into the failed fair value gap, which is the inversion fair value gap, and we can have our trade from there. Now we see price has come into the inversion fair value gap. But if you are to sell from this inversion fair value gap and your stop loss should be above here, then this will be a very large stop loss. What you need to do is to use trade confirmatory entry. You should go to 1 minute time frame because this is a 5 minutes time frame, and then identify a market structure shift or a confirmatory entry for you to take a trade. Here is the 1 minute time frame and this is our inversion fair value gap. So what we need to do is to look for trade confirmatory entry for us to have a very good risk to reward trade. So now we have a break of market structure, bearish, and what we need to do is to have our trade at the retest of the breaker block, and we can have our entry at the breaker block and stop loss will be above this high. Then we can target 1:2 risk reward ratio. Retest